Dan Conaghan, the Bank of England will shortly resume prudential regulation for the entire banking system. Is it fit for purpose?
I think it has to change fairly dramatically, and I think it is changing. What does it have to do? As you rightly say, it becomes responsible for banking supervision, which of course it hasn't seen since '97 when it bade goodbye to it. It also has to continue with its key objective of managing monetary policy. And to do all this, it changes shape. It welcomes in 1,000+ new staff from the old FSA to form the Prudential Regulatory Authority. And I think that in many ways it will be an absolute watershed in the bank's history. And I think not only will its governor change and the rest, many of its personnel change, but I think its whole modus operandi will change and have to change in 2013.
But of course you referred to when it was stripped of supervision in '97 by an incoming Labour administration, precisely because it was seen as incompetent within Johnson Matthey, the Bank of Credit and Commerce and of course Barings latterly. Has anything changed?
Well, a lot has happened clearly in the interim, and as you rightly say, it was divested of banking supervision. It also lost its gilt-edged division, and various other parts, including, for example, the printing of banknotes, were eventually outsourced. I think that there will be people at the bank who were there then, who are still at the bank now, and will probably still be there in 2013, who may just see it as part of the great continuum of the bank's 300-year history.
You mentioned there'll people still be at the bank when their former colleagues come back and join them, many of them. But in the meantime, they will have doubled and tripled their salaries. Do you think there's a danger within the bank that there'll be a huge resentment between the lower paid bank people and the higher paid people from the Financial Services Authority?
My understanding is that one of the reasons that the Prudential Regulatory Authority has been conceived as a subsidiary of the bank is that so that the pension arrangements aren't shared, because I think that a lot of pension provisions in place at the old FSA do not match those at the bank, although I think both are fairly generous, I gather. But I think that I also understand that they might be housed in a different building to Threadneedle Street. So I think they will become part of the family, but whether they're actually fully integrated and whether people will sort of swap notes in the restaurant or the coffee over coffee, I'm not so sure.